Hello and thanks for joining us on Kalkine TV. I'm James Preston and you're watching the early trades. Let's get started with our market open report. Australian shares opened flat this morning following whipsawing trade in the US and Europe on mixed Omicron news overnight. The S&P ASX 200 fell less than 0.1% in the opening minutes of trade following mixed sentiment that hit European shares but added lift to US stocks late in the session. The flat trading for local stocks followed Wednesday's bullish turn when blue chips advanced 1.3% to retrace losses over the past 2 weeks as concerns about Omicron have weakened share prices. European blue chips fell 1% while US stocks edged 0.3% higher, erasing morning losses following encouraging signs from Pfizer that the third dose of its COVID-19 vaccine offered some protection from the Omicron strain. In Europe, new restrictions in the UK to combat the spread of the new variant may lead other countries, including France and Germany, to follow suit. The market has completed the repair work from the Omicron sell-off, and yesterday's rally briefly lifted the index above where it was before the new variant emerged. The index is now comfortably back within the sideways trading range that has developed since mid-September. The dollar had another strong night in the wake of China's move to loosen monetary policy earlier in the week. The Aussie dollar climbed to 0.78%, or should I say climbed 0.78% to 71.79 US cents apiece. US sector gains were muted. Two of the night's top three performers were defensive. Health was up by 0.74% and real estate was up by 0.47%. Communication services also filled out the top three with a rise of 0.75%. On the ASX, the materials sector gained 0.4%. However, financial shed 0.46%. RBA Governor Philip Lowe is due to deliver a speech at a virtual summit this morning. The central bank released its quarterly bulletin at 11:30am Australian Eastern Daylight Savings Time, and China is set to release its monthly inflation data at 12:30pm. Fonterra Shareholders Fund holds its annual general meeting today, and two IPOs originally slated for today have now been pushed back. Time now for a very short break before we take a look at the day's market-making headlines.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With Kalkine TV.
Thanks for tuning into Kalkine TV. This is the early trades where we take a look at the market's morning session. Let's now focus on today's headlines. The largest cash deal in Australian corporate history has cleared its first regulatory hurdle, with the competition watchdog saying it will not oppose superannuation fund-owned IFM investors' $23.6 billion bid to buy Sydney Airport. The Australian Competition and Consumer Commission announced on Thursday there would be no opposition from its side to the planned takeover, as it would only have a limited impact on competition in the market. The takeover is being led by IFM investors and a consortium of other funds and would include taking the ASX-listed airport private for $8.75 per share. The price is at a premium to the company's current stock value of $8.35 a share. The corporate regulator has launched legal action against ANZ Bank after it failed to pass on financial benefits to more than 500,000 clients over 2 decades, marking the final lawsuit from the Banking Royal Commission. The Australian Securities and Investments Commission, or ASIC, this week launched civil penalty proceedings in the federal court over misconduct that saw ANZ remediate $200 million to affected customers. ANZ Bank has agreed to pay a $25 million fine after the Financial Services Royal Commission revealed the major bank had failed to provide benefits, including fee waivers and interest rate discounts, to 580,447 customers using offset transaction accounts under the break-free package. Also, gas producer Woodside will tackle the energy transition with investments in related areas like hydrogen and carbon storage, and not imitate fellow WA resource giant Fortescue's ambition to plough cash into unrelated sectors. Woodside Chief Executive Meg O'Neill told investors on Wednesday that hydrogen production played to the company's strengths as it needed steady production from sophisticated process plants. Green hydrogen produced from water with electrolytes, powered by renewable energy, had the added advantage of not carrying the risk of uncertain and finite supply from gas reservoirs. Alright, well that's all for now. Stay tuned to Kalkine TV for the latest market updates, business news and exclusive interviews. I'm James Preston, signing off for now.